Hello, it's Friday the 21st. I'm FxPlew and this is the market brief. So June inflation data was the big one this week. On the surface it was good news as headline inflation beat forecasts, dropping to 7.9%. However, market reaction and the wider commentary seem to have taken it as an indication of how much more the Bank of England could have done had the MPC not been so fearful of the recession risk earlier in the cycle. Where inflation retreated faster than expected in June, analysts are now debating how much of this was down to the 50 basis point rate hike, and naturally that leads to questions of could they or should they have been more aggressive earlier on in the cycle. Where the MPC lacked the courage for more aggressive action, inflation has remained higher for longer, arguably extending the cost of living crisis, which is bad enough, but this has also extended pay disputes and strike action, and it's increased the risk of embedded inflation from a wage price spiral. Inflation will continue to fall as rates rise further, but we may well be left with inflation that is still over the 2% target, and an economy that's unable to deliver any real growth. That's hardly what you'd call a job well done, is it? Meanwhile, over in the US, the Fed is more deserving of market plaudits. Despite the false start back when Powell's team introduced the idea that inflation was transitory as the economy emerged from lockdown, the Fed started raising rates after the MPC, but they look pretty close to declaring victory over inflation. There are still those raising the recession risk, citing the inversion of the yield curve and other indicators pointing towards economic contraction. But most of the Wall Street investor briefings no longer include a recession as their expected outcome. And Powell is believed to want one more rate hike to ensure that inflation doesn't return in the short term and is almost eradicated from the US economy. If the FOMC agrees, they will probably vote for one more rate hike at the next Fed meeting, which is next week, because after that there won't be another meeting until September the 20th. So that should allow enough time and enough data to confirm if the rate tightening cycle should be called up and called as over. In the market, it's been a choppy old week in reaction to the inflation data. The dollar is trying to reverse earlier losses and the dollar index challenged 101 yesterday. Sterling has continued the slide triggered by the inflation data, and yesterday we fell to 128.40 against the dollar. We open around 128.75 against the dollar. We're about 115.60 against the euro, and euro dollar is around 111.40 this morning. So that's it from me, capping off another week. Thank you very much for joining me. I'll be back again on Monday. Have a great weekend.
If you do not have a clue, then just tweet through and ask FxPlew.